Hi, I'm Jackie Kallen. I'm known as the First Lady of Boxing. And let me tell you, I did not want to get boxed in when it came to figuring out what to do with Medicare. That was a brand new challenge for me. And let me tell you, talk about fights. Oh, I was fighting my way through all of these options, wondering what's the best plan for me. Well, thanks to Senior Enrollment Solutions, I figured it out, and so can you. Let me show you this book. Makes it so simple. If you have a second, let me read some of it to you. It will definitely make things clear for you. Are you ready? We're going to start with Part A. This is the most important part, so pay attention. Part A is basically hospitalization coverage, hospice, home health care, skilled nursing, and blood transfusions. For most, there is no premium to Part A because you've already paid that in your spouse's or your own FICA tax while you're working, and that requires 10 years of U.S. employment or a total of 40 quarters. Part A has a per occurrence deductible. This year, it's $1,484. Not so bad when you think about everything you're going to get. What this means is that if you're admitted to the hospital, let's say in March, you'll pay your Medicare deductible. Now, if you go back in the hospital in June, you may have to pay the deductible again. Once you pay your deductible, though, Medicare is going to pay 80% of all the remaining costs, and that leaves you to pay the remaining 20%. And that includes all the services that you received during your hospital stay. Now, make a note of that. There's no limit to your total responsibility. Does that make any sense to you at all? I hope so, because now we're going to move on to Part B. Pay attention. Medicare Part B is considered your outpatient and doctor coverage. The government assumes that you want and will typically automatically re-roll you in Part B, but it does have a monthly premium. Now that's typically withdrawn from your Social Security, but not always. It's paid quarterly if you're not receiving Social Security. Now currently, this Plan B premium is $148.60. Now, those that have a lower income should also be receiving extra help through Social Security, and that makes a big difference. Now, if you remain unemployed, speak to your Human Resources Department or your insurance carrier to see if purchasing Plan B is necessary. You may already have a premium that may affect your plan choices when retiring. And that depends on whether it's more or less than 20 employees. That's how they figure that out. Now, Part B will cover you both in and out of the hospital, and that's for things like doctors, lab work, tests, durable medical equipment, and your medications. And that's while you're in the hospital, not your medications after. I just want to make sure you know that. Now, your Part B basically covers everything in and out of the hospital, except for the rental of a semi-private hospital room. Now, Medicare covers a one-time Welcome to Medicare. That's a preventive visit that they give you. So remember, welcome to Medicare. Now, for anything else, you will have a small annual deductible of $203 and 20% of any of the services. Now, that's your own responsibility. They will not pay that. Unfortunately, Part B doesn't cover dental or most of your vision, hearing, or prescription drugs. And believe me, that can add up. Trust me, I know that for sure. So to recap, Part A, generally no cost, and there's a per occurrence deductible. Part B has a premium and an annual deductible. And that might need to be paid depending on what services you take advantage of. But Part A and B are often referred to as original Medicare. So it's so important to understand how original Medicare works because you're responsible for a deductible. 20% of every service that you get, you're going to have to pay. And believe me, you'll get billed for it, trust me. Do you feel any more confident? Because I think you've got original Medicare. I think you've got that down pat. Now let's move on. Now, if not, if you don't understand it completely, you can watch one of our videos, you can phone us, or you can review us on our seniorenrollmentsolutions.com. You know, I had to go there just to double check a couple of facts, but it's so simple to navigate. I think it'll help you if I'm confusing you, and I hope I'm not. But let's go on to Part C. Because your original Medicare coverage doesn't have a limit to what you're responsible for as a consumer, most of us kind of fill in the gaps with one or two different plans. Okay, number one is a Medicare supplement. That's called Medigap. Number two is Medicare Advantage. So let's talk about first the supplement plan. The positives of a supplemental plan include that you can go to any doctor you want and any hospital that accepts your plan. There's no network of any kind. And that's important because we like to stick with our doctors. I mean, that was important to me. I didn't want to start up with somebody new. Also, all the plans are standardized, which means they're all equal by the government, and that reduces confusion and gives you the same coverage. Your options are given letters. That even makes it simpler for some of us who are not the brightest when it comes to all this. So once you choose your letter, it comes down to which carrier offers the lowest cost with the highest ratings. Plans C, D, and G are the most popular. Let's talk a little about the drawbacks. You'll have a monthly premium between $90 and $160 a month, depending on the plan that you purchase. Now, you have to understand that in essence, you're prepaying to have your health coverage be as close to 100% as possible. So you're basically purchasing a set it and forget it plan. Supplemental plans don't cover prescription drugs, so you're going to need a separate Part D to cover that. So hang tight because we're going to get to Part D. Now let's talk about the Medicare Advantage plans. We're going to go through that because that's your second option to Part C. With this plan, you're going to kind of trade in your original Medicare to have a private insurance carrier. In this option, the government doesn't process your claims or billing. They're going to hand it off to a more efficient company, and they're going to actually pay them to give you coverage that's as good as or better than the original Medicare A and B. Now let's talk positives and negatives again. The positives are that the luxuries of Medicare are covered. Oftentimes that includes the dental, vision, hearing benefits, and gym memberships, and also transportation and over-the-counter medications. That's a big plus. And also prescription coverage is often attached to this plan, and that can be a positive or a negative, so let's not celebrate that one just yet, because the downside to that is that beyond the monthly premium, we must focus on your prescription costs to find out what the total costs are, and that's something you'll discuss with your agent. Now, a little about the drawbacks to that. Number one, just like privatized health insurance, you'll have a network of doctors and hospitals to choose from. And you have to stay in that network. It's either an HMO or a PPO. And you might have to pay a higher cost for services or even the full cost if you go outside that network. So if you want to stick with your own doctor, then you don't want this plan, that's for sure. In an Advantage plan, it's important to know what's covered and what isn't, especially as it pertains to out-of-network facilities. Let's say you want to go to Mayo Clinic or Cleveland Clinic. So this wouldn't be the plan for you. Now, there's a maximum out-of-pocket cost of close to $7,000 that the government has set on all these Advantage plans. This means that while you may not have a premium, you could have deductible co-payments and possibly have to pay 20% of these services up to your maximum out-of-pocket for the year, whatever that one is. But the biggest disadvantage is if you choose this plan, you only have a year to try it and opt out if you don't like it. Otherwise, you're going to be one stroke away from being stuck in this plan. If you have a serious illness after that 1 year, you might not be able to move to a supplement plan, as many insurers don't wish to insure you if you have that risk. As an example, you would never pull into an auto insurance agency with your car on fire and expect them to give you full coverage. And they would laugh at you and tell you to hit the door. And it's kind of the same thing with Medicare. Medicare Chapter Summary. This is going to summarize C for you. Keep in mind that statistically, 82% of consumers do purchase a supplement plan. They would rather know that in exchange for a small premium, they're covered basically anywhere or at 100%, and that makes a big difference. However, other consumers choose an Advantage plan as they're either under age 65 or have a state-funded plan like Medicaid or SHIP, or they're on Social Security disability. Income or life situations are going to limit you as to which style is better for you. And your agent will go over that with you and help you determine which plan is the best. In these situations, the state may help cover your risk and any premiums you have for Part B and C. If you're struggling due to your income, you should contact Social Security, and they'll help you with programs that are going to qualify you for lower costs. You want to contact Senior Enrollment Solutions to review your available plan options, and they will give you more benefits than what Medicaid or Medicare can offer to you. I really hope this helped you with a deeper understanding of the differences between a supplement plan and an Advantage plan. Once you make the decision of which style you prefer, everything else becomes so much easier. Believe me, it's easy after you've decided. Let's talk finally a little bit about Part D. Going into your final part, you have to understand that this is the most confusing and could be the most costly part of your plan, but we're going to try to make it as easy as we can. Here's a tricky part. Since supplements don't cover prescription medication, you're going to need to purchase a separate Part D plan, or you can face a lifelong penalty when you want to purchase the plan later. These plans usually cost between $15 and $70 a month, and once again, this is separate from your health plan when you choose a supplement plan. It is imperative to review all the Part D plans during your open enrollment. Now mark this down. Open enrollment is between October 15th and December 7th. So get a pen, just make those dates readily available to you. October 15th to December 7th. That's your enrollment period. Drug formularities change every year, so you should review your plan, shop your total annual cost, and that's the premium plus the deductible plus the co-payments. Every prescription drug plan changes their premiums, deductibles, and rates every year, and they will pass these savings or costs on to you, the consumer. If this isn't reviewed annually, you could be paying more for the same drugs at the same pharmacy, but the following year, it's going to be higher, so watch that. So occasionally, your prescription drug plan can drop your medication mid-year, forcing you to pay cash. You don't want that. This is no suggestion to purchase additional coverage. However, it's important to have a backup plan in the event that you need a crown, prescription eyeglasses, or maybe you'll find that your plan dropped your medication. That's never good. So this is a book that's going to help you figure out what the best plan is for you. Senior Enrollment Solutions is there to help you. Their agents are friendly, they're readily available, and together they're going to help you figure out how to knock out your problems with Medicare.